Hello everyone, and welcome to the latest Your Money and Your Life Facebook Live. And what an afternoon to be chatting to you about all things money with the Reserve Bank just putting up official interest rates. More on that shortly. I'm calling it Kochie's Money Hour, the latest news affecting your bills. And let me tell you, I have the Queen of Comparers sitting next to me, Sarah Orr from Compare the Market.
Thanks,
Sarah,
Kochie. You're too kind. I'm feeling brilliant.
Happy New Year.
Thank
Welcome
you.
back. And of course, everyone's looking at their bills at the moment. The credit card bill from Christmas, yes, it was terrific. Now we're having to pay for it. We've got bills going up. It is a big type of cost of living crisis, isn't it?
Yeah,
And pressure.
It doesn't stop.
Huge.
How long have we been talking about this? It
Yep.
has been years. It feels like we haven't stopped talking about the cost of living since we sort of made it out of COVID.
Yes.
So it's been from crisis to crisis, and
it's been a constant pressure, hasn't it,
it
on
has.
families to keep their head above water financially. And so today we're going to analyse your big bills. How do you get the best deal? How do you make your household budget stretch even further? What you can do about it, it's not hard, is it? That's the thing.
no, it feels daunting. People think it takes a lot of time, but it is super easy. So hopefully we can persuade a few people to maybe tackle some of those bills today.
And if you've got any questions, whether it on Facebook Live, whether it be TikTok, YouTube, yes, I am live on TikTok for all those people who are thinking, who is this dinosaur on TikTok? So we're going there. We're here to answer any of your questions. Send them through and I'll put them direct to Sarah. But and remember, note this is only general financial advice. We will point you in the right direction, but we don't know your individual circumstances. So you need to bear that in mind and get your own independent advice as well. And also subscribe to my weekly newsletter that comes out every Friday, absolutely free, ends up in your inbox, gives you great tips on how to manage your money. It's called the My Money Digest newsletter, so you can sign up for that. But talking about your biggest bill, a lot of Australians, your biggest bill is your home loan, and just a matter of minutes ago, the Reserve Bank announced that it's putting up official interest rates by 0.25%. That's after that December quarter CPI figure, which was a shocker, not just in terms of the level of the inflation rate, but it's accelerating. And Reserve Bank couldn't do anything else but this, could they?
No. I mean, and I think that we knew it about a week ago that is almost a sure thing when that CPI figure dropped. It's pretty clear that inflation's running way too hot. But Kochie, it's funny. It feels like not that long ago that we were all rubbing our hands together, thinking that we were in for rate cuts.
Yeah.
And just as recently as August, the Reserve Bank had cut rates. It did it 3 times last year. So a question, do you think, were they moving too quickly on that?
No, I think, and this is why you've got to keep up to date with what's going on, because there's so much uncertainty in markets, so many factors out there. And yeah, you're quite right. August, they were predicting another rate cut in December, and probably 2 more in 2026. Well, that's been blown out of the water by the inflation rate going up way more than expected. And today's language from the Reserve Bank is indicating they're expecting inflation to stay higher for longer than they expected. So more rate hikes are not off the table. And that's the thing to be concerned about, because as I said, it's not just the number. Remember back in September, it was higher than everyone expected. And a lot of the experts were saying, it's a one-off. It'll correct itself in December. Well, when it didn't correct itself in December, that's when the Reserve Bank's going, all right, maybe we did go a bit too early, but also, I think, despite what the Federal Treasurer says, government spending is so high that it's creating all this demand in the economy through wages, building costs going up, all that sort of thing. is directly resulted from the record spending of all three levels of government. So, message to politicians, start tightening your belt because we're paying for your spending in higher interest rates at the moment.
And sooner rather than later, because we know that monetary policy, it all lags, doesn't it?
Oh,
so
it does.
we need
It
to start acting fast now because it's going to be months before we actually start to see those results,
so Sarah,
right?
people are sitting here going, oh geez, that's a bit grim. I was expecting rate cuts, not a rate hike, and if there's even more pressure on the budget. What's it going to mean, this 0.25% for the average home loan borrower, and then what can you do about it?
Yeah, so we always crunch the numbers and compare the market. And so in real terms, what does that rate hike look like? It's about $94 a month more for a $600,000 loan. So yeah, over $1,200 more a year, which is a lot.
$200 a year, that's an economy flight to London.
It's huge.
So that's in terms of what it's taking out of your lifestyle.
That's right, and I mean, yeah, if we get another one later in the year, then you're looking at double that. So, and that is a huge amount of money for most people.
So do you just cop it?
Do you just cop it? Well, look, if you are on the most competitive rate that you possibly can be, then there mightn't be too much you can do. But I would say a lot of people could be saving. You need to look at what else is on the market. So check your interest rate. And then do a quick comparison and just see what are the market leading rates at the moment. I'll tell you a story, Kochie. A colleague of mine, Steve, he's one of our great home loans brokers. He was working with a client who was on a fixed rate of 6.39%. So already super high. He'd fixed it a couple of years ago, but that came off in December. And his bank put him on a backbook rate of 7%. That's ridiculous, isn't it?
So rolled him over to 7%.
Yeah, that's right. So our broker, he's obviously found some much better offers for him, but took a really interesting strategy here, splitting the loan. He was able to lock in half the loan on a fixed rate of 4.89%. I know, wasn't he lucky? Because all of those fixed rates with a 4 in front have disappeared, but he got half on the really great fixed rate and then a competitive variable of 5.39% on the other half. So immediately saving a lot of money. And just think about if you're doing that consistently over the life of your loan, it's easily tens of thousands of dollars that you're saving.
What's a general rule of thumb? Everybody, okay, this is a bit of homework to go away and do this afternoon or tonight. Find out what rate you're on, and then wait to see what your lender does. And most of them, I think, will definitely put it up the 0.25%. So what's a general rule of thumb? Before they put rates up, if you're on, like Steve got 5.39% for a client, is around that 5.5% a good rule of thumb? If you're paying more than that, you can get a better deal. If you're paying a lot under it, you're on a good rate.
That's right, yeah.
A number to relate to?
Yeah, definitely. You'd be looking at the low fives now. So like I said before, the rates, unfortunately, with the 4 in front have disappeared. So now the more competitive rates are in the low fives. I'd say,
if you're paying 6%, you're a mug.
Yeah, absolutely.
If you get your balance, your home loan, and you're paying 6% or above, you're paying way too much.
Yeah, I think a lot of people think, oh, that's just ridiculous. Is anyone on those rates of 6%? And people really are. We do hear about it every day. So it is well worth taking a look to see if you could be saving a bit of money.
Right.
Or at the very least, see what's out there and call your bank and just say, can you match this? Find the benchmark and use that for negotiating.
Because go on your bank's website or look at the ads they run on radio or TV, and whatever they are offering a new customer, if it's lower than what you're paying, give them a call and go, hey, I'm a loyal customer, why aren't I getting the new customer rate? Now, I got a feeling most of them will match it and go, oh, okay, we don't want to lose you as a customer. If they don't, go somewhere else.
You would be amazed.
Yeah.
People find, doing these negotiations really daunting, but there is evidence that it really works.
Yep.
And, that's what the customer service people are there for. Give them a call.
And they can only say no. And if you're on a great rate, well, happy days.
Or at the very least, maybe get a broker to do it for you as well. You know, if you don't feel confident doing the negotiations, team up with a good broker and get them to do that legwork.
That's great. All right, we've got some questions coming through, whether you're Facebook Live, YouTube, TikTok, send them all through. Rob on TikTok says, Chrissy is the first one on TikTok. Is it beneficial to refinance? Well, that's what we're talking about, is refinancing.
Exactly.
That's Chrissy, that refinancing is a term that's describing exactly what we're talking about at the moment.
We'll just add, though, on Chrissy's point, you do need to work out, is it cost effective for you? Because there are costs associated with refinancing when you do it. So you need to make sure that the rate's competitive enough and that it checks out for you. It'll be, a couple of $100 in different fees from your bank that needs to discharge you. So just weigh that up. But, again, work with a broker and they can sort of go through that with you.
Yeah, Sarah Orr with me from Compare the Market. I call her the queen of comparing. She nails all of this from your mortgage. We'll get through to private health insurance, electricity bills very shortly as well. They're coming up. But hey, interest rates is the hot topic at the moment because today's Reserve Bank interest rate hike has really blindsided a lot of people. So a lot of questions coming in. Ross has an interesting one. I'm thinking of selling an investment property next financial year after June 2026. Will this latest rate increase affect what I can get when I list the property for sale? Ross, that is the more than $64,000 question. It's about the $640,000 question if it's the average price of property in Australia. Look, property's all about demand and supply, as we know. Now, interest rates going up means that borrowing to buy a property will go up as well. So you would think that would pull down demand, all right? And there would be less pressure on the property market. Problem is, there's such a shortage of supply of property that that's almost offsetting it. So
absolutely.
A lot of the predictions, like SQM Research, Nerida Cottesby, Ray White, are all saying even though there is an increase in interest rates, property market will continue to rise values, maybe not at the pace in some areas, particularly the high value states like Sydney, where property prices are really big because of affordability. They might be dampened, but it's unlikely to spark a crash, is what the experts are saying.
That's right. So slowing down a little bit, not a crash, and very dependent on where you live as well, where the growth is. And,
So, and we also have a question here. Is the RBA rate increase a result of lowering too quickly? What's your prediction going forward? And this is from TikTok as well. Well, I think we talked about that a bit earlier. That also looking in retrospect is pretty easy for us all. So we've got to bear that in mind.
Well, what's changed?
But while Jim Chalmers and the government last year was saying Reserve Bank cut more, cut more, cut more, and remember the Treasurer put his own people on the own appointments on the monetary committee that sets interest rates. So there was a bit of a split last year, you'll remember, when a lot of committee members, or a number of the committee members, want another rate cut. Michelle Bullock said no. She had a feeling that inflation may not have been under control for the long term. She's been proved absolutely correct, and Treasury and the Treasurer have proved incorrect. So I reckon, thank goodness for Michelle Bullock, because if they had cut even further, it would have been an even hotter economy, is my view.
Seeing how volatile inflation seems to be, you know, is this sort of the future? Do you think we're going to just have to keep rates higher for longer?
Interesting thing is we're the only country in the world where rates are going up at the moment. Advanced country in the world. And you've got to ask yourself, why is that? And this is why I put the blame squarely at the feet of the politicians and how much they're spending. Because we're about the only country in the world where governments are spending at record levels. They are spending at the same level as they had to do in COVID to keep us from going into a Great Depression. So you had to spend back then, as most countries did, but since then, when economies and businesses have got back to normal, most governments have pulled back their spending. We haven't. We've kept it going up. And so it's created this hothouse in the Australian economy. So look, it will all be very data dependent going forward, as the Reserve Bank keeps telling us. So I think, you know, the jury's still out, and I can't see a rate cut coming through anytime.
No. And sort of sticking on this, Kochie, Rob on TikTok's asked about silver and gold, the commodities, what's happening. He's asked, is it manipulation?
Not manipulation. Gold and silver often reflect big investors around the world, and we're talking central banks, we're talking big superannuation funds, when they get really nervous about things going forward. And if you look in my weekly newsletter last week, I did a chart on the amount that central banks are buying in gold over the last 3 years, and how they've cut back investing in US government bonds. So central banks are a bit nervous about the US economy, the US dollar, Donald Trump, what's he going to do
putting all that
tomorrow.
pressure on to cut rates.
Yeah, because markets hate uncertainty. And excuse me, that's what it's all about at the moment with Donald Trump. So they're getting out of government bonds, getting into gold. So that demand is going up. But as soon as I start seeing queues of people outside bullion shops in Sydney, Melbourne, Adelaide, Perth, Brisbane, I think that's the ringing of the bell at the top of the market, which I have mentioned many times in my newsletter over the last 2 months or so. So look, if you've ridden the gold price up and the silver price up, half your luck. If you're thinking, oh, now could be a good time to get in, I just think the risks are so high because, and we've seen the volatility in the last week has been all over the place. All right, keep your questions coming in. Interest rates, your big bills. Let's get on to one of the biggest bills that people have, and that is private health insurance, Sarah.
That's right.
And first of April is usually when premium hikes go up.
Yeah.
What are you expecting?
So, look, we're expecting that any day now we're going to hear what the industry's average increase is going to be. So every year, all of the health funds into negotiations with the hospitals and with the government to decide how much they're going to increase their premiums. And then at the end of those negotiations, and they can go on quite a long time, they'll go back and forth. And sometimes, Mike Butler, the health minister, will say, no, this is way too high, go think about it again. So they'll negotiate for a while and then they'll come out with the announcement. Hopefully we do have one very soon so that people can actually take some action when they find out what their increase is going to be. But this year we think that it's going to be higher than usual. So I think that the government's worked very hard with the private health funds over the past few years and since COVID just to keep the increases in line with or below the rate of inflation. But this might be the first year that they have to increase it a little bit more because there's so much pressure on those private hospitals as well. And
okay, Sarah, I'm being a cynic.
Yeah.
It all depends on the political cycle. Because if you're a federal government going into an election campaign, you don't want to be accused of increasing the cost of living. So when a health fund comes and goes, I want a 5% increase, I can imagine, the health minister going, well, no, you can get 2%, but hey, if we're elected, the first one after we're elected, I'll make it up.
Look, you're not wrong. The timing feels right, and maybe it has been a long time coming because they've kind of been stifling the increases, and now we're going to see a bigger one.
So we think 4 or 5%.
4 or 5% is what we think. We did have a look at what this could mean based on premiums purchased through Compare the Market. So an average hospital policy is around $2,641, and a 4 or 5% increase would add around $105 or on the higher end, $132 onto that annual premium. So again,
that's a fair bit.
It's a fair bit.
So now it's, because 1st of April is when these price hikes usually go through. And the big headline rate will be 4% increase, 5% increase. Does that mean you sit there and go, well, there's nothing I can do about it? Every policy is going up 4 and 5% because that's what's been approved.
Yeah, no, I mean, the headline is a convenient figure to talk about, but the reality is, for everyone, it's going to be very different. It's going to depend on your health fund and it's going to depend on your policy. So, for example,
So it's a bit of a myth to say they're all going up by the same amount. Like
that's right.
Last year, premiums went up 3%,
Yeah.
but there was one fund that put premiums up 9%, and another one that put them up 1%.
That's right. Yeah, there's huge variation. There's huge variation between the funds. There's huge variation between the policies. And if you're on some of those very dear gold policies, if you need the top tier cover for things like pregnancy, IVF, weight loss, then those policies have seen some of the biggest increases in recent years. So it's well worth having a look around to see if you might be able to save by finding a better offer on similar cover, or maybe you do a bit of an audit on your health cover if you haven't done it for a long time. Health insurance isn't really designed to be a product you hold on to for life.
Right.
It's got to change with you and your health needs.
It's got to suit your stage of life and your lifestyle. So when you do an audit, you check on any extras you're paying for and whether you really need them. I really need glasses. I probably need a bit of physio, but I don't need a lot of other.
Yeah, you don't need orthodontics because your kids are, they've grown up.
So check what you're paying for as your first step for an audit. Then if you find a better offer elsewhere, a lot of people presume, if I change, I'm going to have to reset the waiting list again. But that's not the case necessarily, is it?
No, not if you're switching to the same level of cover or the
no matter
level
who you
of cover
go
below.
with.
That's
if
right.
it's the same level of cover, no reset wait list, or lower cover, no resetting wait list. If you go higher cover, maybe you will.
That's right. And of course, as you would expect, if you're getting cover for new treatments that you weren't covered for before, but there is that protection there if you're switching to the same level. So that needn't be sort of a hindrance for you. But I think the other thing to mention is, we talk about health insurance premiums going up around this time of the year, but it's actually when a lot of the funds decide to release all of their best deals because they are competing for new business. They know that people are getting those premium increases through the mail and they're getting frustrated and they're thinking about switching. So all of the health funds will roll out the red carpet. You'll see things like weeks free. Some of them will waive waiting periods on extras. Some of them will have all sorts of, exciting discounts, bells and whistles. So, it is worth taking a look because, maybe you find a fund has a similar premium for you, but they have all of these extra sweeteners for the new customers. That's what you could be missing out on if you remain loyal.
And they waive waiting lists, all that sort of stuff, don't they?
Yeah, that's right, yeah.
But also, okay, you know your fund is putting up their premium 5%. They've told you, they haven't told you yet, but look out for it on the 1st of April. Depending on your cash flow, can you pay up front?
You can, yes. I mean, we love to talk about...
So lock in.
Yeah, you can lock in. We love to put it this way, you know, share, head, her, break out, head, turn back time. You can turn back time on your premiums because if you pay for the year in advance and you get in before April 1, you can just lock in that year's premiums before the hikes come into play. So we love that one, if you're able to, you know, and I think that's probably the one catch there. It is a bigger outlay. You know, you might, if you've got some savings there, it might be a good hack for you. It really depends on your financial situation, whether you have the, work out the cash flow, but that can be an easy way to do it.
So health insurance, do your audit, check your extras, check to see if there's a better offer on the same level, and you can switch without resetting your waiting periods, and also look at locking in your 2025 rate for 2026 before the 1st of April. So a few really good tips there on what you can do. Don't forget, any more questions, send them through now. Sarah from Compare the Market is here to answer them in detail. Huddy has sent in a question. What's our opinion on novated leases over saving and buying a cheaper car outright? As we said at the start of the show, this is just general advice because we don't know your income bracket, tax situation, things like that. General rule of thumb, Sarah, is that novated leases can work really well for people who are on higher tax brackets or particularly small business owners. If you own your own small business as a sole trader or a business, ask your accountant about novated leases and weigh them up. And particularly, I've got a son-in-law in the car business at the moment, looking for a car, small business owner, and he said, well, the best deals are buying an EV because through the business, because it's exempt from fringe benefits tax, you get all these incentives. So talk to your accountant about it. That would be the best advice from me, I reckon.
Lots of cheaper models becoming available too now. It's not just a, you know, Tesla-dominated space. It's lots of choice.
And on that, car insurance.
Car
is
insurance,
a big thing to look at if you're buying a new car, Huddy. And again, there are some tricks of the trade there as well, aren't there?
Yeah, absolutely. I mean, I think that there's a lot of flexibility when it comes to your car insurance to save by adjusting, you know, your excess, for example. A lot of people will just select the default, but if you do have a good sort of emergency fund there that you'd be happy to tap into in the event you need a claim, then adjusting the excess accordingly could help knock, you know, potentially hundreds of dollars off your premium. And I think that's an easy one that a lot of people don't think of. But again, like everything, we just see huge, you know, price discrepancies between the insurers. So well worth having a look, shopping around when you're looking for that new policy for your new car.
Yeah, all right. That's a really big bill. Another one is electricity and energy bills seem to be going through the roof. Yes, government rebates come in and out, but you know, all in all, it's pretty expensive. The ACCC, the governing body, sort of the big watchdog in Australia, this is their figure. They reckon 2.5 million Aussies are paying too much for their energy bill at the moment. And 73% of the households with the power to switch to cheaper deals have not made the change.
Yeah, we're constantly campaigning on this. So last year, around 80% of people who had the power to switch had switched. So we have seen, that number has increased. So, which is good. So more people are switching. Yeah. But that number, 73%, that's almost 3/4 of people that's way too high, right? So, and this is one of the easiest ones to switch. Like your energy retailer will literally tell you on your bill if you could save on a cheaper deal with them.
Okay. Your homework was to go and look what you're paying on your mortgage. Your next bit of homework is to go and get your latest energy bill. And you only look at how much you owe and when it's due. But how much you owe, there's a little panel to the left-hand side of it, usually on most bills, that tells you whether your energy retailer has a better plan for you based on your usage and how much you can save.
Yeah, if you see it once, if you see it once, you'll never miss it again because there's really like it's great. And sometimes the savings are significant, so definitely check. I think there's like energy bills. Sometimes they're several pages long, and people just think, oh, what do I need to look at here? It can be really confusing, but definitely don't miss that. And then when it comes to switching over, it is super easy. If you run a comparison, you can go on a website like Compare the Market and run a quick comparison. You can enter your bill details and they'll generate quotes based on your usage. But once you sort of hit the button, the retailers handle it all for you. They'll deal with it. So it's actually quite light touch.
So the ACCC has said 2.5 million people paying too much. Do you know what the average is that they're paying too much? This, according to the ACCC, $221 a year.
Yeah,
so you're paying $221. A vast majority of Australians paying $221 more than they need to an energy retailer. That's a lot of dough, isn't it?
It is. I mean, there are plenty of things I'd much rather spend that money on.
Absolutely. Good question from Stuart here through the email. A bit confused about solar feed tariffs. A lot of people have solar power. Why are they so low? Often a cent, 1 cent or below. I know that the government wants everyone with solar panels to buy expensive batteries, but I'm still trying to recoup the cost of the panels. So we're feeling a bit duped at the moment.
Oh, Stuart, I totally sympathise with you. And you're not wrong. It is so much trickier to save money using the solar panels now. And I think that, people remember those halcyon days where, the feed-in tariffs were super attractive because the government wanted people to invest in solar panels. So there were all sorts of deals and offers available for people. But now, I think it's a third of homes have solar panels, so they don't need to try as hard to attract people to that market.
Okay.
So those have disappeared. 1 cent or below, it is ridiculous. And there are plenty of offers out there that are 1 cent below, and it's rubbish. But do have a look and see if there are better deals. I ran a quick comparison for a house in Sydney before jumping on here with your Kochie, and we did find 2 offers with feed-in tariffs at 10 cents. So. Wow. Yeah, it's all right, and it's a lot better than the 1 cent tariff, that's for sure. So definitely have a look and see. It will depend on where you live and how you use the solar panels, but do have a look. I think, the government now wants people to invest in the batteries. Right. So yes, Stuart is right. Without having those batteries, it is harder, but
so you get a 30% rebate from the government on batteries, but
that's
a colleague
right.
of yours, Henry at Compare the Market, he actually did the sums on whether it's worthwhile spending that amount, even with the government rebate. What did he find?
Well, so he looked at a couple of different solar batteries costing between 12 and 15 grand. And even with the rebate of 30%, it was going to take over 7 years to see a return on investment on those batteries. So you've got to be playing the long game. So for a lot of people, it's not going to make the financial sense to make that investment right now.
Right.
But again, the easiest way to save will be to take a look and run a comparison and see if there's a better feed-in tariff for you.
Okay, good question coming through here. Do you know, this is from Palmview in Queensland, do you know if we bought a house with gas, hot water and gas ovens, will I have to get rid of them on my own dime? surely not, if you want to go to electric. Is it worthwhile changing from gas to electricity, I suppose, is the question.
Is it
or
worthwhile?
Is it much of a muchness?
Yeah. I mean, I think that yes, if you've bought that house, then you will have to get rid of it on your own dime, I believe, would be the situation. And there are directives for new homes not to have any gas at all.
Yes.
So that's the government's objective there. But if you've bought an existing home, then I think the onus will be on you to replace it. What the timeline is for that, it'll depend on where you live. So you mightn't have to do it immediately. So yeah, look for other ways. If you do have the gas and it's a bit of a concern, you can compare your gas bills as well. You will have a choice in your retailer, probably depending on where you live. So have a look at that and see.
Is it better to combine them or have separate gas and separate electricity retailers? Because logic would sort of tell you, and when it comes to money and energy groups and insurance companies, logic doesn't really play into it, does it? You would think a combined one would be better.
Well, you would, and look, it's not necessarily. And I actually have both electricity and gas at home, and I've never been with the same retailer for both. So.
Right.
And this is why I do love Compare the Market, because you can run the quotes and they'll give you, the two quotes, and it'll tell you, if you're better off with the same retailer or with the two different ones. And it's really just as easy to connect with the separate retailers when you run it that way.
Right.
So you don't actually need to do too much more legwork, you're still just running the same comparison and then, selecting your different retailers.
Okay.
But no, I mean, bundling, I think people will often pay more for the privilege of just being with the same energy retailer.
Marty has made a comment. He's just installed solar. He says it's definitely a long game, but worth every bit of it.
Yeah.
So there's a good recommendation from Marty. Another one, does the battery's warranty outlive the time you will recoup your investment amount? That's a really good thing. Good question. That will probably depend on your supplier as well, won't it? So double check that.
Absolutely. Yeah, lots of considerations
and battery technology is changing so much all the time. Like batteries were like technology dinosaurs for decades and decades, weren't they? And now they're becoming more efficient, they're becoming smaller. So, hey, it's a very competitive market out there. Hopefully the innovation continues. All right, so we ticked off your car insurance, your electricity bill, your mortgage so far, home and contents insurance, Sarah. And the average home and contents insurance quote, $2,833 a month you found in your, because CTM compare the market to a general insurance quote index, that's up almost 25%, almost 23% in the last year. They're big premium increases, aren't they?
They are massive, and these are new quotes, Kochie. So we track new quotes from insurers, but you can only imagine if you've been with the same insurer for a number of years, your renewal notices could be a lot higher than that, because your insurer probably thinks, well, they're a loyal customer, we can whack them with a bigger increase. Well, then you're missing out on all of those new discounts.
But they put a loyalty discount on your bill.
It's all just
put
marketing.
Up the premium, and we've taken off a little bit with a loyalty discount.
Hollow words, Kochie. It doesn't mean much at all.
Doesn't mean anything.
No, I mean, look, occasionally, maybe you are on a great deal. And look, I'm not going to rule out some people might be on a great deal and they'll do a comparison and they can't find better. And, great. That's what I love to
Sleep
hear.
well at night.
But you sleep well at night. But I think that the vast majority of people could find better shopping around. I'm actually in the cycle at the moment for doing this myself, Kochie.
Yep.
My renewal notice came through. It's a few $100s dearer than it was last year. So now I'm running the quotes. I'm making calls.
Yep.
There's been a huge disparity between the quotes that I've got actually. So one of the cheaper quotes was around $1,500. The highest quote that I got was around $3,000.
Wow.
Double the price.
Double the price.
So it depends on, the different insurers, they will include different kinds of cover, but ultimately it's for you to work out what do I actually need here? Do I need to pay double the price to cover my home?
And also, different insurers will risk rate and risk assess your area different to somebody else, or risk rate your agent profile different. Like an insurance company might say, I've got enough grumpy old baby boomers insuring on my books. I'm going to give a great deal to young married couples.
I wish, Kochie.
No. But they are in this particular city, because I need more customers in Brisbane rather than Sydney. So don't think that because your insurance premium goes up, everyone will be doing the same. So it's not worth me looking around. It really is worth it, isn't it?
Absolutely. It's definitely worth it. We see it every single day. Price gaps of hundreds and sometimes thousands of dollars between different premiums. It's definitely worth having a look. And they just keep getting more and more expensive. So it just becomes more important that you seek out those deals.
And like your health insurance, we said do a health insurance audit, do a home and contents audit as well. Are you valuing your contents too high? We did in the Kochie's Budget Challenge in Your Money and Your Life, which is coming back to Channel 7 in a couple of months. We had one couple who put the land value of their property into their home and contents insurance because they misunderstood what the insurance covered. So don't put the value of the land, just as the name suggests, insurance of your contents and the structure, your home on top of it. So, just make sure you're getting value there.
That's
and you're
right.
understanding the coverage.
Yeah, that's a really common mistake, and it's sad because you think the typical land value is somewhere between $800,000 and $900,000. That's a huge amount of money that you're insuring and wasting, because your insurer won't pay that out either, because it won't cost that much to rebuild your house. So have a real think about how much it really will cost to rebuild, and also think about things like the demolitions and the removal costs. If your house is raised, then you need to think about what other costs might be associated with that. There are things like emergency accommodation too. So
Yes.
A lot of people can, be lucky. They can lean on their family and friends and maybe live with them. But if it's an extended period of time and you don't have family and friends around, you want to make sure that that's in your cover.
There's the financial stress there and also the relationship stress.
Yes.
Family and friends as well.
I know. Don't make a stressful situation worse, basically.
Exactly. All right, Luke from TikTok saying, how high will the Australian dollar go? This offsets some inflation. True. Okay. Luke, when the Australian dollar goes up, when interest rates go up, as I said before, we're one of the only countries in the world that have put, Western countries, putting interest rates up. So what does that mean to a big global investor, a German superannuation fund or an American superannuation fund, who is swishing around billions, hundreds of billions of dollars every minute chasing the best interest rate? So those fund managers in Europe will be going, whoa, interest rates in Australia going up. They're paying a much better interest rate on my income portion of the portfolio than the Americans are, or the Germans are, or the French are. I will switch that money into Australia. And of course, it goes into Australian dollars, and that pushes the Australian dollar up. So that's the link between interest rates and Australian dollar going up. But what does that do? We're an exporting nation. So that makes exports more expensive and imports cheaper. Now, for anyone who had their summer holidays in Europe or the United States, you're thinking, why didn't this happen in September or November and make my holiday cheaper? Because it's really expensive to go overseas at the moment because of the currency differential. But the Australian dollar going up will make imports coming in cheaper, which will lower inflation on those imports, those sorts of imports, cars, electronics, some clothing as well, because we don't produce much of that stuff here in Australia, will make travelling overseas though cheaper. Exports more expensive, imports cheaper. Those cheaper imports will have an impact on inflation. So if you like, that's a bit of a silver lining.
It's shaping up to be a really interesting year, isn't it, Kochie?
It is going to be fascinating.
Yeah.
Because I don't think anyone knows exactly what's going to be going on.
For financial nerds like you, what a treat.
I know, there's a lot to, which is why I give another plug for my newsletter every Friday. Go to ymyl.com.au, sign up to the newsletter. I give you my thoughts every Friday.
It's a lot of fun. Sometimes you go into chocolate prices and coffee.
Yes,
It's a bit of everything.
Always try and make it entertaining. Also, another question, so what kind of events do we need to pay attention to in the future in terms of the economy? What drives inflation? Again, I cover this in the newsletter as well. The Reserve Bank only does two things. Okay, it's got its constitution says you do two things. You keep inflation under control and keep it down, and you keep Australians in jobs. So that's what you look out for. Unemployment rate and inflation, in the eyes of the Reserve Bank, is what determines interest rates. So if unemployment goes up and people are losing their jobs, the Reserve Bank is likely to cut interest rates to stimulate the economy and create more jobs. Now at the moment, unemployment's really low. Job creation is huge, and that was one of the reasons behind the Reserve Bank putting rates up. So they had inflation going up, unemployment low. Low unemployment means there's a lack of workers, so a boss needs to offer more money to get a person to come and work for them, and those wages feeds into inflation. So it's a bit of a vicious cycle, so you've got to understand that. So to answer your question directly, unemployment figure, inflation rate, they're the two key economic factors to look out for in terms of interest rates going forward.
And back to what you were saying earlier, Kochie, about the government spending too. I think the May budget is going to be a big one. Yeah. That'll decide what's the future really.
And that's a challenge for the markets. That the Reserve Bank governor, a lot of economists are saying to Jim Chalmers, you actually have to cut your spending, because another beneficiary of higher inflation is him. Because when inflation goes up, a lot of wages and award wages are tied to inflation, so that's pushing a lot of workers into a higher tax bracket, and they're paying more income tax into his budget. So, that's the issue at the moment. So people are paying more in interest and they're paying more in tax because of the wage rises. So again, it's fascinating how they're all linked together and what the government's got to do. Some good news on the Reserve Bank as well, with some credit card surcharges they're looking at. When I go and pay for my cup of coffee downstairs here and pay $5, it comes back $5.07 or $5.10, Reserve Bank's been looking at that.
Yeah, I think that's an important one because it sounds, like a tiny amount of money, but it adds up when you think about all of the purchases that we're making. And of course, people are going to pay with card. We're almost like a cashless society now. So
I can't remember the last time I had cash or coins.
Yeah,
Or a wallet.
I do wonder though if they get rid of the surcharges though, are they just will the retailers just bump up their prices to cover the costs because someone's obviously taking the hit there. So it'll be interesting to see, but ultimately, good news for consumers because at least there's a bit of transparency there about how much it's costing them.
Yes,
exactly. What you see is what you'll get.
TikTok user says, if you pay in advance, do you always get a discount on your insurance premium?
So look, in a lot of cases, not always though.
So double check.
Yeah, so double check. So yes, if you do get in with your health insurance and you pay for the year up front before April 1, before those hikes come in, yes, you can lock in the lower rates. The other one is with your car and your home and contents insurances. Sometimes the insurer, depending on the insurer, they might have some transaction fees with monthly transactions. So you can avoid all of those by paying annually. And sometimes, it can be $100 or so. So it's definitely worth looking at if you've got that cash flow.
Another question from TikTok, how can we make it easier for single parents to get into housing? Again, I don't want to harp on this and sort of be too critical of governments, but I will because I think they're doing a bad job in this. We have a critical housing shortage at the moment, but 20 years ago, 30 years ago, state and federal governments would be building up to 50, 60,000 low-cost houses a year. And that was part of it. Now, they produce virtually nothing. So again, I think it's a challenge to governments to say, you have a social responsibility to build low-cost housing. Why aren't you doing it? Why has it fallen off the cliff? We're in a housing crisis. Instead, they blame landlords, which are, usually your mum and dad or your neighbour. They're not big, greedy, rich people at all. And they say, no, you're the scapegoat. Well, no, they're not. Landlords, it is governments actually spending more to build more houses and particularly low-cost housing. Big challenge for them.
For sure. They've tried to address it through policies like the low deposit schemes that allow you to buy houses with less money. But the problem with that is it floods the market, so more people are trying to buy and it pushes the prices up of the houses.
And supply we talked about earlier.
And also, if you're buying with a small deposit, you've also got to be prepared to pay a lot more interest over the life of that loan and have bigger repayments. So it's not really it's missing the mark, isn't it?
Low deposit is a quick hit fix to a really complex problem that needs a lot of planning. It can't be short-term thinking. It's got to be more construction, more low-cost housing. That's the only way to save it. Banchero says, Kochie, why do I always have to change my insurance every year to save money? Because those rotters in the insurance company take advantage of you, give you a good deal straight up, and you think, oh, I've got a good deal, it's going to be a good deal forever. Same with electricity prices and energy. After a year, you usually come off that good deal.
Absolutely. Yeah, I mean, it's, if you've been at the same retailer, then you're just probably missing out. All of the discounts, the incentives, they're there for the new customers. They're there to attract new business. So unfortunately, there's not a huge advantage when you're loyal.
But it is time and money well spent. Like a lot of people say to me, oh, why do I have to do this every year? My mum, I've told this story before, 91 years of age, car insurance it's more a psychological independence type thing, doesn't travel far. She was paying $2,300 a year on her car insurance, been with the same insurer 30 years, said, I get a loyalty discount every year, so I must be on a great rate. They treat me really well. I went, compared the market, got it for 720. She said, what dodgy insurance company is that with? And I said, well, it was Woolworths Everyday Insurance Reward insurance company. And once a month you get 10% off your supermarket shop at Woolies. Well, she was over the moon. But that saved her about $1,500 and took me 10 minutes. Now that's not a bad hourly rate in anyone's language, and that's how easy it is. So believe me, even though you think of it, oh gee, it's a chore, it's not a chore because you can get it done easily, and if you don't do it, you are just lining the pockets of the insurance companies and energy retailers and giving your money to them rather than keep it yourself.
I mean, yeah, like you said, amazing hourly rate there.
Yep.
It's almost like we have to make it like a game.
Yep.
You know, because it feels like boring life admin. But when you think of the money that you could save, it's amazing.
Yep.
But yeah, maybe it's you treat it like a bit of a game. You know, how much money could you save? That's the challenge.
Really good idea. Okay, I'm going to be doing that. Send it in, go to your money and your life, go and compare some of your big bills now, send the information into me, and we'll have a bit of a competition to see who can save the biggest amount from actually comparing.
We love these stories.
And do you still do compare the market hoodies?
Oh yeah, we do. We absolutely do.
Okay.
We've got the meerkat hoodies.
We've got 5 hoodies for winter to people who the 5 biggest bill savings, I reckon. So, gee, I'm doing this on. Sarah, I hope I don't get into trouble.
No, you're good. We can give away some hoodies. We'd love to hear some stories.
We'll tell the stories and we'll give away hoodies to those people. How's that?
We can't wait.
Yeah, I could have got into trouble for that. All right.
No.
That's an hour. Gee, that's absolutely flown by. Thanks for your company. Hopefully you've enjoyed it. Hopefully we've given you some good tips. Always great to have Sarah Orr from Compare the Market to take us through this and hold our hands. Head to comparethemarket.com.au to compare your bills. That's where you can start. You can catch up on this session on Your Money and Your Life YouTube, and subscribe to my YMYL newsletter at ymyl.com.au. Sarah, so good.
Kochie, yes, I know. The time just melted away. It was a lot of fun. Thank you so much for all the questions.
All right, and we will be back. We'll let you know. Thanks for joining us.
Thank you.